So, Jonathan, it's interesting to see this drop. Is the housing economy grinding to a halt, just like the rest of the economy, or is there some life to be seen in the housing market?
Well, right now, the way to look at the market is it's essentially paused, and it didn't really pause in New York until about 2 weeks ago. So we just released an Elliman report covering the first quarter, and the data really reflects the first 2.5 months. The second 2 weeks have been characterized by a winding down of transactions and a drop in inventory. We really are seeing consumers pull back and wait until sort of the coast is clear. And I think the way to think of this impact on the housing market is the longer or shorter the virus situation is by different regions of the U.S., the more or less damage we see to the economy and therefore the housing market. So we're at this unique moment where we really don't know, and there isn't a light at the end of the tunnel yet.
It's interesting, isn't it? Because I guess people are pulling because the longer the amount of days something is on the market, the worse it looks and so on. And also, can you really show somebody a house or an apartment at a time of social distancing, Jonathan?
Well, that's the issue, is that up until yesterday, New York, in the context of New York City, New York State did not allow brokers to show properties. That they had to maintain shelter in place because they were considered a non-essential business. That ruling was actually reversed yesterday to great anger, I should say, by the real estate community, because in sort of a twist, the longer we shelter in place, meaning we stay in our homes, the faster the housing market will recover on the other side of this crisis.
That's fascinating. Now, for the inventory that's on the market, is it actively on the market in the sense that it could be potentially bought at a discount, for example, Jonathan, or is it just left on the market but people aren't really expecting to sell, so they're not dropping their prices?
So that's an interesting point, because really what you're seeing is the properties that are on the market, there's virtually no activity there. I'm sure there will be investors at some point, because if you had to sell your home today, for whatever reason, that there would be a discount associated with it. When I think about other crises like this that have hit the Manhattan housing market specifically, with 9/11 and the financial crisis, or we call it the Lehman moment, where we saw prices drop, at least temporarily, anywhere from 25 to 30%. So there is a potential significant impact. But as I said, the shorter this timeline is with the virus, the less economic damage and the higher probability of some sort of uptick at the end of all this.
So, Jonathan, you've seen periods like this before. Obviously, each catastrophe is an awful event and unto itself, a very individual thing. But what tends to happen to home prices, to rents, to housing prices after a big catastrophe and a massive drop, for example, in the stock market?
So the first and leading indicator tends to be sales activity, whether it's closed or contracts, because that's the first thing to happen, and we see, and then we don't see prices fall immediately. We're sort of where we're at now is markets tend to freeze up, and then once we start seeing activity, then we'll start seeing pricing decreases. I can tell you that in the next couple of months, if we're still in this shelter-in-place mode, you will see significant price cuts by people that have to sell. The ones that don't are probably going to wait it out and not see as big of a discount. And that's essentially what's happened in every crisis.
So it's really a massive event for the industry. I mean, obviously it's a massive event across the economy, but for housing in particular, it's not been that long since Manhattan in particular recovered from the likes of Sandy, and before that there were many other awful catastrophes. So Jonathan, what about the rental market? What will happen to rents?
Well, I think the big question with the rental market, because we've been going through over the last year fairly significant rental price increases as a result of the weakening of the purchase market, the sales market. We call it camping out, that a lot of would-be buyers were camping out in the rental market. The problem we have now is there's a pretty widespread expectation that a large number of tenants over the next few months won't be paying their rent. And so the pressure will be on the landlords. And I would think that there would be a pressure to try to renew leases because it's become somewhat impractical to show rental apartments. And then with that drop in income, that creates stress on whatever mortgage or financing the landlords have. I think what's really interesting right now is that in this crisis versus the last one, is that the banks are the stronger party and are being leaned on by governments, municipal governments around the country to forgive or stop foreclosures or do anything to sort of keep the economy running. And that is the complete reverse or opposite of what we saw during the financial crisis.
Yeah, and isn't it amazing, Jonathan, because just a couple of weeks ago, as you said, it was actually a very strong housing market, wasn't it?
Yeah, and one of the things that happened in the first 2.5 months after the New York market, especially the high end, has been somewhat under siege over the last couple of years. We've seen sales activity and pricing trend lower over several years. Really, in the beginning of this quarter, we started to see a lot of optimism in the market, an increase in activity. In fact, sales activity in the first quarter year over year was actually up 13.5%, which is only the second increase in sales on a year-over-year basis in the last 10 quarters. So we were headed into this crisis on a stronger footing than we have in the last few years. But the rule about these crises is that there's no look back behind the crisis. You have to look forward, and because that's what determines whether consumers participate in the market now or not.